Welcome to Trading Lounge and the Commodity Futures Report for Wednesday, June 8. Starting with the US dollar index on the daily chart. Here we're looking at wave 1 and 2 and 3 and pulling back for 4 with hopefully a simple ABC correction, but wave 4s can get complicated, so we need to be on our toes about that. And we can see the stochastics, how far that's moved up here, and the price hasn't moved up very much at all. So it's a good chance that this is corrective, and we've got an impulse wave here, corrective here, and impulse wave here for that. So we're on the 2K tick, so that's where we'll just have a quick look at the intraday on that space. And we don't need all of that. Is that enough? Plenty there. So top of wave 3 for reference point. And we know on the daily chart that the move up here was quite shallow, quite fast. So that means that it is corrective in that indicator, suggesting that it's corrective. At that point, we've got, I thought that looked a bit low. That's why I took to check it. That's our 50-60% retracement level. Hasn't quite sort of got there yet, but I'm thinking that it could be finished. So I was just sort of thinking that, well, first of all, an A wave, a B wave, and then a C wave up here. But I just not quite sure if it's finished. So I can count 5 waves in this little move. I can count 5 waves in this little move here. We can count 1, 2, 3, 4, 5 here. That could be rearranged. So it's possible, in a nutshell, to put wave 4 over here and have one more little move up here to finish this off. Okay, so just be a little bit mindful of that. I'll just grab that B wave and put it over there. However, that move down here appears to be impulsive. So if that's breached, if that low is breached, then we can be on the short side. Obviously at the 200 here, you'd want to, the market will bounce around here a lot. Once you've got that as resistance, then we can look to short again. So it's possible that it's done and dusted, and the euro and the indices, the euro US dollar and the indices would kind of help support that. But yeah, this is just not quite right, this little move here. So we could have wave 4 there, or I'll put wave 4 back here and have wave 1 and 2. So if this does take that low out, then you can be short and look to add under that, but otherwise we'll have one more move to the upside and then we'll come down. But we weren't really interested in trading any of this except once we got into the C wave here. So now that we're sort of entered that, we want to catch that little third wave down for that. We should see some equality between wave A and wave C, just in terms of distance. Obviously this number here is going to be a bit of a magnet, and we'll be interested very much so in trading this move up here, and the same with the euro as well in the opposite direction. Okay, so over to, where are we, GDX, so over to the gold market. So with GDX here, as I've mentioned, we can count 1, 2, 3, 4, 5 down here, and then we can count retracement, and then another 5 here. Yes, it could be an A and a B and a C correction to this point, and we could just continue to go up from that point. But we are seeing some gold markets, like some in Australia, like Newcrest Mining, that have taken out the low here, suggesting that there's further to the downside. So 1 and 2 and 1 and 2 here. Now, like I said, that can push up further. So, yeah, we just need to understand that a little bit. It doesn't count very nicely as 5 waves up there, by the way. So if we go to the 100 ticks to check on that. So there's a couple of things here. We can look at it as 1, 2, 3, 4, 5 to the upside as wave A, and then a B wave. And then we were looking at it as 1 and 2 and 3 and 4 and 5 to go up for a wave C here. But it just appeared that we got 5 waves down here in this move coming down here. So that 5 waves is either wave 1, and then we've got an A, B, C for wave 2, and if that's the case, we can short below this B wave low here. Secondly, if we're going to look at this as the A wave here, then we could look at this as an A and then a little A, B, and C here for the B wave and down for the C wave, and have this B wave here sitting over here, and then go up for wave C there. So that's possible. So all we need to do in the short term is short that low, so, or the 32 here as the retested resistance. If it does drop down through here, that means that, well, US spot gold can do the same. It can move up to this point, or it can move down here. So, but that low is critical at this point. The this is not what I was looking for, but anyway, emerging markets here. It's quite interesting here. We've got a triangle of an A, B, C, D, E here, then up for 1 and back for 2. I think there might be one more little move here. It's why I had this chart. I was going to check it, but anyway, I'll keep an eye on that. That's just really all these guys here, and you know, there's some good stocks in here, of course, 10 cents and Alibaba and so on. So that's popped now because of those Indian stocks, and that means the US have lifted the ban on them, so it's sort of up and running again. So I mean, it's kind of interesting really, you know, all of this pattern here, because it doesn't suggest you know, that we're going into some major bear market or anything. It's, you know, if this is a triangle pattern, which would be some sort of wave 4, then this would be 1, 2, 3, 4, 5. So, you know, looking for much further, I just don't see the end of the world coming just yet, not today anyway. Anyway, back to the gold now with US spot gold here. A little bit complicated on this chart, but I won't go to the weekly again on this, but so we can look at it as an A wave up to here, an A, B, C for the B wave, and then a C wave here, basically to finish that correction off as wave or wave 2 here. It is possible, like we just did with the other market, is to put this wave B over here and look at this here as an A wave, a B wave, and a C wave down here for the B wave, and then push up here for a C wave. That C wave would come over here then. That said, when I open up this here, yesterday we were looking for an A and a B and a C into the box, and I won't go in and count all of this again because I did that this morning in the Australian video, but we looked at 1, 2 and 3 to here, 4 to here and 5 to here for the A wave, the B wave, 1, 2, 3, 4. I think we were somewhere, I don't know where we were earlier this morning, but anyway, so as an ABC pattern, that's all done and dusted at that point. So what we're looking at, this looks a little bit impulsive down here. It may just be like I've got here an A wave, a B wave and a C wave here. So this would be the first leg down. So we need to wait for the second leg to go up, and then we'll have the third leg down here, and then that will retest and either continue up that point or it will come down, and then that will be our short position. So I'm just going to clean this up and just refine all of that a little bit further. That's just the 8 there. We talked about that this morning. Don't need that. We can just drop that below there. Also, technically speaking, the low of wave B here, if that's breached, then we know that we're in a bear market at that point. So this is going to really decide which way we're going to be going at this point. But as an A and a B, it can be counted as 1 and 2 and 1 and 2 here. So we just need to give it a little bit of time. But that B wave taken out, and it's all downhill from that point. Okay. If that top is taken out, then we can go long from that point if you want. Same thing. If you're not long, you might as well be short, and vice versa, and so on. But that's really the line in the sand at that point. So yeah, I mean, originally I was looking for a bigger C wave up here, but really it's probably about 61.8% of the length of wave A anyway, in terms of relations thereabout. So it's kind of okay. Anyway, we just need to be careful here. I mean, it does look like it's, I mean, normally when I'll just sort of look at this here, I'd look at this as being quite positive, sitting on the 18 here. The 1850 here, it's just snaking across there, and it's kind of, when a market does that, it presents itself as being sort of bullish, but we have made a top above that correction, so that negates that particular thing needing to go any higher. So anyway, it'll sort itself out in this little space here for that, so we'll just wait and see. Silver's the same as well. We can look at all of this here as the A, the B, and the C wave here, not quite like that, but I'll just keep it simple as a top. But the point here being is that we look at this coming down here as the impulse wave coming down, and then the A, the B, and the C wave up here. So any move above this top here, and you can look to go long, but otherwise this will be wave 1 coming down, wave 2 here, and then working lower at that point. If we do a pattern like that, then you can also go long above that high there. Okay, so we're at the 61.8%, you'd go long above that if you wanted to. So otherwise we'll be working lower in line with gold at that point. Okay, over to the soft commodities, and yeah, I mean, I can sort of see the situation, you know, why this is consolidating in here. I was thinking this could be two things. We could have this as wave 1 up to here and then back for wave 2 and then continue higher, or it could be wave 3 up here and then we can come back for wave 4 over here. The stochastics have been sort of loading up here. The spring is reluctantly wanting to move down. So if it takes that high out there, I thought we'll take half a position. And then once we've got support on top of 23, which will be group 1, then we'll take another position and we'll have a target up here at 25 for that. Today we'll just have a quick look at wheat, corn, soybean and sugar. And you can kind of see why these are in that particular space there, why that's sort of just hovering in the middle. First of all, we got wheat, which is, we've been looking at an A wave, a B wave and a C wave coming down here. I think there's still more to come down here. This will be sort of 1 and 2 here, and then the third wave to this point here with 1, 2, 3, 4, 5 here. So there's a bit more to go. So on the wheat side of things, which is a good 15% of that index, so there's sort of still pressure to the downside on that. And with corn, I think it's much the same, but that's, I have to say, that's sort of perked up there a fair bit. I could count it here as an A wave, a B wave and a C wave down here, but my wave 3 is a little bit short in here. I'll have to go in and check that. Not that we're not really trading this, I'm just using it to have a look. But if I either get 5 waves into this space here, then we'll look at this low being in place, but yeah, just a little bit short within this space. Maybe it's not, maybe it's a bit illusionary. There's no overlap there, not too much. I mean, that's definitely 1, 2, 3, 4, 5, and that's 1, 2, 3, 1, 2, 3. Can I look at it like that? Anyway, I'll sort that out. It doesn't really matter. But if I get 5 waves here, then we'll be on our way to the upside there. And soybeans. So this level here, a bit of an odd number, it's 1650. I treat it as a medium level, so if we get a nice support on that, we'll look to the upside. It looks like it wants to push up, and we can also see by soybean oil, where's soybeans, why won't that come up? I'll just type that in then. I just want to have a look at soybean oil. There we go. Just swoop over to that. It had a nicer pattern here. It had this nice A wave, B wave and C wave here. So for me, soybean oil, that's up for 1 and back for 2 here. That's going to go up. This pattern here is the same as this pattern, just reoccurring pattern. So that's, I'm going to take that away, but that's a trade on that side. I'm just going to go back to my soybeans now. Is that the right contract month? Yeah. So this is probably the A wave, the B wave and the C wave here, and this is one. So this will probably push up here, but what that means is it's just going to, that consolidation rings true here and here for this consolidation. So it's possible for this to pop here, you know, and that geared up there. That's what I'm sort of thinking. And sugar, I don't know how, yeah, well, how much weight has this got on? A fair bit, yeah, 11-12%. Anyway, I can see that this is corrective, so the whole thing wants to push up. It just hasn't got this, the closest, largest number as support yet, and I'm not going to call the trade in on that. So that's the end of the soft commodities as such, but all I can say at the end of the day, mix in the a big mixed bowl of things here, but we can do half a, you know, a small a part position here, I should call it, which could be 25%, you know, 1/3, 1/2, whatever, and then we'll do a full position up here. If we get a little classic trading level pattern and everything looks pretty rosy, we can do that, and then we'll exit here on that. Coming over to the energy sector, so as I've shown with this chart before, yeah, I mean, it just wants to push higher. That's all I can say. I know I could redo this here, but we'd still be left with ones and twos here. So this is still pushing higher. We've got wave 1 here and 2 here, then 1 and 2, and there's a little 5 waves, 1 2 3 4 5 for the third. There'll be a fourth and a fifth for the third, then a fourth here. They could drop back below the level, these wave 4s here, but either way, and then wave 5 up here. So this is still going to the upside here, this energy sector, which will be gas and crude in that. I don't know what else it's got in there. I don't know if there's any bunker fuel in there or what the hell's in there, but I will check on that. Anyway, that's the energy sector. So it's, this is what kept us long in oil, looking at this here. So we're still going to the upside here for that. Now, looking at crude oil and gas, so we do have a nice support here. What we were thinking, so we've still got further to go up. I was thinking that this would be, as we've been talking yesterday and every day, about 1, 2, 3, and 4 here, and then looking at wave 5 to go here. And then after these little 5 waves here, we should see some sort of pullback over here to rebalance those 5 waves there, and that's when I thought that we should be looking to get in again at this point, because we'd been in through here and we got out just here, and now we want to look to get back in. It looks a bit silly that we got out and got back in, but it was just what I was reading at the time, so just another mistake, but all in hindsight, easy in hindsight. But anyway, we made money. That's the point. Just that we could have made more, Pete. Woulda, coulda, shoulda. It's the old story, isn't it? Anyway, that's where we are with this. So I think one of the things here too is that this medium level here, 1150, the market has, been sold off here. It's come up here, took supply out, it's wingled its way over here to be support. I would like to go long just here, and you could probably put half a position here to hold on, but you'd need to hold on for it. You would need to hold on for just to give you a bit of an idea. The worst case scenario is that this move from here to here could be another wave 1 to here, and that could bring us back into this space. That's the worst case scenario. Okay, the best case scenario would be a 38.2% retracement level coming back into this area through here. That would be the middle of the road scenario. I'm just going to move my little red line there. So that's why I got out, because of this possible pullback within here. So we'll just see how that plays out, because we're talking ones. Anyway, I won't go into all of that too much at the moment, but this is building and it's got further to go to the upside. So I just wanted to refine the entry. I'll probably stuff it up, but I'll do my best. So that's that. And natural gas. So natural gas, we could look at, we've got a few positions here, so we could look at 38.2% retracement level. That brings us back down here at the also a medium level at $9. So we could pull back here, or we could just push straight off from there. I haven't really pulled that apart. I don't really care. We're going to go long again here, and we're going to be taking profit at the number 1 up here for that. So, and there's a couple of ways I could reorganize this as well. This wave 3 also might be up here as well, and this wave 4, but I always go for the conservative and the worst case scenario, and then only things can get only better from that point. But anyway, the trend is up, and we've been trading Australian gas stocks up in this as well, and they look pretty good too, actually. We've been this is IBX here, the biology what's the name, which is also looking good. We've got an impulse wave here. All of this is corrective, great accumulation process, an impulse wave here, correction here. So the move up here is fantastic. So the next 72 here, really, the more that 72 becomes the support here, 71 blah blah blah, 72, there we are. So the more that 72 becomes the support, the stronger the next little trend to the upside. But we're not here for that. We're here for Aussie stocks, but you've probably got gas stocks in your space too. So I'm just going to go to the monthly chart here. It'll just give you a bit of an idea of where we think things are up to with all of this in terms of these are quite big Australian gas stocks. So this is monthly chart here. So first of all, we can put this over here and have an A wave, a B wave, and a C wave. If that's correct, then that top will be taken out. It may be that this correction will just be over here, the B wave will be over here, and then there'll be a C wave over here, and this will be 1, 2, 3, 4, 5 for the A wave, the B wave and a C wave up to this point here, and then crash and then go down to here. So that's what we're trying to work out. We're currently long in here at the moment. I'll leave that there. But if this is 1, 2, 3, 4, 5 for 1 and 2 here, nice sharp move back for wave 2, and then we'll be sort of just continuing higher. So we'll just keep an eye on it. If we get support on this level here, then we know that we'll be taking that top out. But for that to happen, that means gas must be going much higher as well, isn't it? So we could go 1, 2, 3, 4, and 5, or third wave normally comes in across the top here. So this, we could be in for a long, good few years trend here in that. And the other one, Woodside, that you may have heard of as well. I mean, this from the top here down to the bottom here is not an impulse wave because it's got overlapping wave structures. So in one way or another, it's corrective, and it looks like it's got good volume in and moving off. So in terms of some of these gas stocks, we're just sort of starting. So where does that sort of leave us with when we look at natural gas? We could also bring that back again as well and have a look at the commodity section ETF under commodities here under United States Gas Fund. I mean, not sure what's happened here with all of this, but you can see the volume coming in here at the low at the moment, so we're just going to wing that back here. This is a monthly chart. So it's kind of like what's happening in the gas market, but in this case we've got a nice clear move up here, so as like at least wave 1 here, or the A wave here, and then we've got sort of 1, 2, 3. So this is still, I mean, this volume is amazing here, isn't it? It's really pushing it up here on the monthly here. It'll spend a bit of time at 30 maybe, just kicking across there, and then move up further from that point. But it's just like the beginning of a trend. Now the thing here really is that the question is this wave 1 and 2 here, 3, 4, 5. This is what we've got to kind of figure out here. Do we have an ABC to the upside here, or are we looking at the first 5 waves to the upside? Because, if we are looking at 5 waves from the low here, then we're going to have a correction and then have another 5 waves, aren't we? So, the gas situation, look, basically the green technology at the moment is fantastic as it is, and it's improving all the time, and thank the Lord for that, but it's not strong enough to sustain everything at the moment, is it? And the gas is a transition from in that fossil fuel transition. So maybe gas is going to be here for a while in that one. So anyway, long-term holds good. Anyway, short-term futures contracts here, natural gas will push up to this number up here and take that money off the table. Okay, we're into the metals now, the iron ore and the copper and so on, and this is XME here, and it does appear that from the top here we've got an A and a B and a C down here for wave 2 because it's nice and sharp. I don't have a full impulse wave here yet, but certainly have 1 and 2 here, and then 1, 2, 3, 4, probably building up for 5 here. So it's going to move up here. At the 60 here, we'll see a little dance here. The time it gets to the 60 up here and has a little dance across the 60 as a head and shoulder kind of thing, we'll be able to work out what that is at that point. But this so far is an A and a B and a C. So I don't see anything stopping this market from just continuing to cruise higher at this point. But what I'm waiting for is 5 waves up here somewhere, and then the pullback, and then we can look to build in on this ETF as well in this case. Alrighty, so iron ore, this is the one out of China. We've also been looking at the Singapore one as well. The Singapore one's lagging a little bit, but here we can see that we'll probably push up higher here to 1001 up here as 1 and 2 and 1 and 2 and a third wave. Because we're at the old high here and we're in a fourth wave, we're going to spend, you know, a good week or two in here before we sort of push a little bit higher in that case. When we look at the seaboard market here for this as well, I mean, I know it looks quite sort of bearish here. We'll just see how it all plays out. Good volume came in here to pull that up, so it's good support here at that point. We'll see if we've got any follow through volume in this. This is on the monthly, of course, so we want to go to just check the daily first. I can't remember what one I was looking at this on. We'll find it. Okay, what's the daily? So the daily one here, we've got so this iron ore here is seaborne, so I think it's still sitting. There's the stuff sitting on the ocean there, so TSI Singapore iron ore, freight, the FE name for it, the refinery of it, continuous contract. It hasn't pulled up to the old highs like the other market has, but what we're tracking here, we think that it's an A and a B and a C wave here. It's all pretty clean to me. And then I'm probably looking at this as wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 to move. But you could also count this as an A wave, a B wave and a C wave up there. So I need more development up here. I need to get past these little 5 waves here that I've drawn out there, those little from that low here, the 5 little waves up here. Once we pass those 5 waves, then I know we're bullish, and then I know that we'll be looking up at the next level up here at 180 or 200 for that. That will probably be in Singapore dollars, I'd imagine, but or US dollars actually. Yeah, US dollars is about right. So that's iron ore, and I'll move on from that. We are in iron ore stocks and copper here. So with copper here, we're looking from the low here, just on the intraday, from the low around here, we're looking at 1, 2, 3, 4, 5. I know there's overlap there, but it's probably the best count as 1 and 2. And then this strong move here looks like a wave 3, but the problem is it pulled back 61.8%. So we were looking at a little A, B, and C to squash up in here. It seems to have worked okay. We will, and it would have been nice to add to here, but I just needed a bit more evidence of strength and so on. So we'll look for a classic trading levels pattern on the 45 to add to this position. And once we've got support here, then I'll move our stop up under this one here, and we've got a couple of positions here. So anyway, a bit of a rough ride. I wasn't expecting it to pull back that far, but yeah, anyways, wild swings, wild days, wild times. So nickel's been a bit of a gamble in terms of counting this off the low here. But the good news about this is that because this could have always been an A wave, a B wave and a C wave here, and then we just come down from that point, but then we ended up with this little 5 wave move here. So that's an impulse wave, so that should give us a little ABC and then back and push up again. So I think that we can be moving up. So we've got a couple of little positions here. Once we get a little classic trading levels pattern on the 30 there, we can also use the arrival, the reaction, the first high above the level, the ABC pattern, and so on. So we've already could use the arrival at this point. I know we could use that as another arrival and reaction, but I want to work this leg by itself here. So we just want to wait for the first high above the level here, basically, in a nutshell, get 5 waves up there, and because then that will stop anything being an A wave, a B wave and a C wave, and then coming down here further. So what we'll do is we'll just take that top there, and that will be nice and clean sailing to the upside, and then that means we can have a low in place at that point too. So we're just clearing out all the negative counts, and that will be left with positive counts at that time. But this is where we are with our risk. These are part trades, and we'll do full trades through group 1 here. And uranium. So uranium popped nearly 6% overnight. So that's all fine, but we're not out of the woods yet, because we can look at this as an A, B, C for the A wave, and then the B wave here, and then 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave. So we can look at those blue 5 waves up here as an ABC pattern. So I should really put them Anyway, I'll just leave it. I've just labeled them wrongly. That's all. I should have had them another degree higher, but it doesn't matter. And here we got 1, 2. Looks like we've got 1, 2, 3, 4, 5. It could be one more little high here, but to come into play, it doesn't really matter anyway. If it has another little high there, it doesn't matter. But the thing is that if it has another little high here, or that is the high, and we start pulling back for this wave 4, then we can be finished with this. We can be done and dusted. The only other thing that I can see in here that could be a possibility, if I label it with something different, is this little move here as wave 1, and then back here for wave 2, and then wave 3 here, and wave 4 here, and then wave 5 that will take us a little bit higher at that point. So there's a couple of little things in here. I mean, really, this is the number that we're gunning for, but we want this to be, we want a classic trading levels pattern coming into this number here, the medium level 25. And once we've got that, then we're past the 61.8% mark here, and then we're bullish, and we can start putting in full trades on this, and I'm sure uranium stocks will be looking good by that point as well. So once we get to here, we can look at those uranium stocks, but there's still risk of this being a corrective move to the upside. I don't think it is. I think we're on the right track, but you know, just good to know rather than think that you know, kind of thing. So anyway, we're still gathering evidence for all of that, but anyway, all looking good. We've only got part positions in here, but yeah, I mean, I would have added normally here on the 22 here, but because of this odd little move here at the beginning, it's kind of scared me, and I scare easily, so I've got to take it easier on those things. So anyway, there we go for that, and that's just Ethereum, not just Ethereum, that's Ethereum. So that's it. Thanks for tuning in, much appreciated. Cheers.